The gas prices have come down from their highs, but that might be a short-lived event. Jackie, what do you have for us?
Good afternoon to you, Neil. That's right. Well, the administration certainly is touting the decrease in gas prices as a victory, but they're doing it in such a way to leave some room for prices to bounce again, because that could very well happen in the future. So today we're at $3.70. We are down from the June record of $5.02. It's a 26% drop. The administration says prices are lower because it's tapped the SPR for the emergency oil to help the American people. But that SPR now stands at 442 million barrels. It's actually the lowest point it's ever been since October 1984. Since President Biden tapped the SPR, it's down 30%, just to give you some context. Now, many are debating if this is a situation that qualifies as the type of emergency that the SPR was designed for, but that's a separate conversation. A million barrels a day isn't nothing, but it's also not enough oil to account for the 26% drop that we saw in gas prices when we consume roughly 20 million barrels a day as a country. It's about 5% of our daily needs. The real reason crude oil prices are trading lower is because speculators see the Fed raising interest rates to slow the economy. Those speculators are worried about a recession, and they think demand is going to drop. So what is it that could take us higher, and why are people worried about that? Well, the EU's embargo on Russian oil and gas goes into effect at the end of the year. That's going to tighten supplies again. That's why experts are warning both gasoline and home heating costs will rise this winter. So if supplies tighten further, prices could rise even if demand is a little bit slower. Now, a lot of people like to reach out to me on social media, and they say things like, well, U.S. oil producers are pumping, and that I've got this story all wrong. Well, they are pumping, Neil, to answer that question, 12.1 million barrels a day. But that's still a million short of where we were in February of 2020, right before the pandemic. Had big oil been investing and building out the infrastructure the last 19 months, we could be pumping 13 to 15 million barrels a day, and we wouldn't need to tap the SPR at all. Also, we are short on refineries. We always have been. They're certainly not going to build those refineries when the administration is pushing electric cars so hard. So part of higher gas prices is the increase in demand that we saw all summer. But the other part is that the supply is just not rising the way it could if the politicians were approaching oil and gas a little differently. Neil?
Jackie,